Hello, and welcome to our guide on IR35. If you work for a client through an intermediary, such as a limited company, as most contractors do, then you should consider IR35. In this video, we will cover: what is IR35 and who does it apply to? What determines whether or not IR35 applies to you? The consequences if you're not operating in the proper way. What are your options if you're caught by IR35? Put simply, IR35 is a piece of legislation that was introduced in the year 2000 in an attempt to prevent disguised employees from taking advantage of the tax benefits of contracting through their own business rather than being employed directly. A disguised employee is someone who works through their own business to benefit from tax advantages, but the relationship is really that of an employer-employee relationship. For example, if someone quits their full-time job and immediately starts working for the same company, completing the same work, but as a contractor instead, then they would be classed as a disguised employee and would therefore be caught by IR35, or inside IR35. Contractors who work through their own business can structure it in a certain way to avoid paying national insurance and a lower amount of tax. The client also saves money, as they don't have to pay employers' NI, holiday pay, or sick pay. This is why HMRC are keen to ensure that all contractors have genuine commercial arrangements in place. There's no definitive answer as to whether or not you would be caught by IR35, as so many factors are taken into consideration. New case law also changes the opinions of professionals as to the criteria. However, there are a number of factors you can use to judge the likelihood of your status being inside IR35. The following are some examples of factors to consider: whether or not you use your own equipment or whether it's provided for you, whether you receive any benefits that an employee would, such as training, holiday pay, sick pay, or pension contributions, whether you have the right to use a substitute or subcontractor to do your work instead, if there's a fixed notice period, if you're managed by the client or have the right to work in the way that you want, if you're taking a commercial or financial risk whilst operating your business. No one factor determines if you're caught by the legislation, but rather all factors of the working relationship are considered. Contractors can be written to fall outside of IR35, but HMRC tend to look at the actual arrangements rather than the implied relationship in the contract. So the best way to decide your status is to have your arrangements reviewed. We can review your circumstances and give our opinion on your IR35 status and level of risk to the legislation, but we cannot guarantee that HMRC would not take a different stance. It does, however, limit your risk. For further peace of mind, we can also offer insurance to your company if the worst should happen. It can be very expensive indeed if you're unlucky enough to be investigated by HMRC and found to be operating in the incorrect way. You could face the following costs. Penalties. If you don't take due care to regularly assess your IR35 status, then HMRC can charge you penalties. Penalties can also be charged based on your level of cooperation during an investigation. Tax. HMRC can assess the tax you should have paid as an employee for the time you were trading with the incorrect structure. They would assess the tax you should have paid and the tax you did pay and charge you the difference, which can be a substantial amount. Professional fees. Your accountant or representative would charge you for their time in dealing with the investigation, which could run into thousands of pounds. However, if you were a client of ours, then there would be no charge for this time, as it's included as part of your package with us. As you can see, it's important that you get this right, as the consequences of being caught out can be high. So, how should you operate if you're caught by IR35? There are a number of options available to you. Agency pay-as-you-earn. This is where the agency employs you directly and deducts your tax and NI like any other employed job. Use an umbrella company. An umbrella company will create a contract with the agency or end client and operate a payroll on your behalf. The umbrella company will receive your income, deduct all tax and national insurance after certain expenses, and their fee, and pay you the remainder each month. Umbrella companies are not very tax efficient, but can be convenient if you only have a short contract. A limited company. You can still operate through a limited company, but you must ensure that you pay yourself exclusively through a salary rather than a small salary and the remainder in dividends. This ensures all tax and national insurance is paid to HMRC. There are some advantages to this method over the others in that you can still benefit from registering for VAT on the flat rate scheme to increase your take-home pay, along with claiming a set 5% expense allowance on the company's turnover to reduce your tax. These methods of trading are far less tax efficient than running a limited company in a commercial way, but they offer all the protection of not being caught out by HMRC further down the line. Well, that's it. Hopefully you now have a better understanding of IR35. But, as always, if you have any questions, then we're happy to help. Thanks for watching.